Sitting here today with Bill Kauffman. He's the managing director at Oak Grove Capital. And Bill, you joined Oak Grove in early 2011 after a few decades in the business. What attracted you to Oak Grove, and how are you planning on growing the business there?
Okay, Steve, thanks for having me. Yeah, I've been at it a few decades. Thanks very much.
Sorry about that.
Not a problem. I'd say there are a couple things. On a professional level, Oak Grove was focused on senior housing, and the prior shops I worked at, senior housing is a small piece of the entire puzzle. We've got $7.5 billion of servicing, a third of it's senior housing. So the principals, Kevin Filter, Dave Williams, have been doing senior housing for years, both in the HUD front and also with Fannie and Freddie. So it's a great fit in that respect. And personally, with the kind of companies I've worked with, at least the structures of companies, publicly owned and big private equity, this is a better alignment of interests. Small shop, 85 people, very focused on getting business done for clients.
Well, that would be a nice fit to be so heavily focused and not feel like you're an orphan within a larger company. What's the mix currently at Oak Grove between the Fannie Freddie side of the business and the HUD side in senior housing?
Generally, things are distorted a bit, and I'm sure we'll talk about the bigger deal that was done this year that got publicity. Based on those numbers, we're 60% Fannie, and then the rest equally split, 20% Freddie, 20% HUD. And then, I know you asked before about growing the business. Oak Grove is not well known. It's an outgrowth of years ago Glacier Financial. The principals, as I said, know the business, and frankly, we've got some new people on board. I came on board in January, and it's really been an opportunity to get to know the team, get the word out, land several deals, and really focus on the agency side first, the Fannie and the Freddie business. And eventually, I think we'll add a few more HUD people. But our HUD reputation in the upper Midwest is terrific. And with the right originators, we'll probably expand that presence.
Do you think you'll be doing any non-agency, non-HUD type lending?
Yeah, that's going to depend, Steve, on what happens with the lending community. I have been at this for years. And at one time, life companies financed nursing homes. I originated life company deals for Capital Holding, Northwestern National. These are names that aren't even around anymore. I don't think that's going to happen anytime soon, but to the extent that our clients need other avenues, and there are life companies or banks who are interested, we'll work with them. One possibility we've kicked around is working with some commercial banks who want to get their money into this space. We're used to taking risk on the Fannie side, so we might team up with them and take a risk position.
Okay. And then in the summer, this past summer, you guys did just about $500 million of financing. Obviously, one large one for Brookdale. Was there a reason why it all kind of bunched up? Because you did that large one and you did a couple other, good-sized 20 million type.
Those are the deals you got the press releases on.
Right. Oh, you're not giving me the rest.
No, there are a few others. I think it's an outgrowth of the team coming together early in the year. I literally started January 1. There's going to be a lag time. We need to get some systems in place for the approval, to figure out deals on the front end, get the approvals done properly. And oftentimes deals have a gestation period of 120 days. So it took a while to get the momentum going. That's picked up, and things clicked at the right time, and several of these borrowers rode the great treasury market at the right time.
Right, no, it's great timing, and you got some great rates. All of those were in the IL/AL space. Do you see doing more on the skilled nursing side?
Yeah, it's again going to depend on origination efforts. The team as presently constituted is more weighted doing independent assisted. We do have a good-sized book of HUD business right now. We're doing a lot of A7s, and I'm going to guess $75 million in HUD business we'll end up doing this year. So we don't promote it a lot, but we will do more. We're very comfortable with it. In fact, did one hospital deal we haven't publicized. We refinanced a HUD hospital loan.
Not bad. And there's no question that rates today, especially with HUD and the agencies, are at an all-time low. Are you seeing just a rash of refinancing? Is that what's pretty much driving this?
There are a lot of conversations going on. the one deterrent is if someone's done a fixed rate deal. Say they did a deal at 7% interest and there's 2 years left to go on the loan. You start comparing the 7-year treasury note versus the treasury index for the yield maintenance calculation. That would choke a few people in terms of the prepayment. I'd say the public companies, they're definitely looking long term and know a year in advance maturity, it's best to clean up the maturing loans. They're willing to pay that price more likely than a regional guy. But it's an interesting discussion. There's not a right answer or wrong answer. Are you better off taking that low rate today and paying a bit in yield maintenance, or seeing the yield maintenance burn down over the next 12 months and then gamble on where the rate's going to
higher rate? Yeah. Well, at least fortunately, no one's predicting higher rates in the next 12 months, or very few people are, given what the Fed's trying to do.
Curiously, there are borrowers who take in variable rate deals today.
They're taking what?
Variable rate deals.
Yeah.
So those are borrowers who want the prepayment flexibility, don't think it's going to be a long-term hold, and don't want to face the yield maintenance. Right. And by historical standards, if they're in their sub 4 for an interest rate today and then at a cap in the low 7s, that's an attractive proposition as well.
Right. How about acquisition finance? Are you getting many requests in that area?
Yeah, several of the deals, we did a couple of deals that were mentioned in the senior care investor were acquisition deals. Did a 3-property transaction with Capital Senior. In the process doing a couple more small pools. And I'm aware at this conference of a couple bigger opportunities that are percolating.
Well, you're going to have to tell me about those off camera. And let's talk a little about your big deal. You did a $437 million refinancing for Brookdale. I think it was 44 or so properties.
Right.
How did that come about? And I think you did that with Fannie.
Correct.
And how did that come about? And did you look at other sources?
Brookdale actually looked at Freddie. It was not through us. It was a competitive situation. In Brookdale's case, these were loans maturing in 2012. There was some $600 million of debt that was maturing in 3 different loan pools. It was pretty clear that Brookdale wanted to look at a corporate finance strategy. They were able to access the corporate market. They wanted to try it, so they went out and sold notes. And my recollection is I didn't. 2 3/4 was the rate. So therefore, raising that kind of money, convertible notes, they were able to get lower leverage on the financing. So both Fannie and Freddie were very competitive on the pricing, and then ultimately Brookdale wanted a combination of fixed and variable, again, to play the odds as to flexibility down the road. Right. So the facility we ended up doing was quite unique. It had some bells and whistles that I hadn't worked on before. You've got substitution rights, you've got expansion rights, in addition to the basic release rights. But being able to expand properties during the term of the loan was a big plus for Brookdale. And that helped win the day for the Fannie deal.
And do you know offhand, was that the largest Fannie loan done in the last couple of years?
I'd say in the last couple of years it probably was. I know of at least one Fannie credit facility that was done, I'm going to guess 4 or 5 years ago. But clearly it got a lot of attention at Fannie Mae. And they're very happy with the business. And really, the 3 parties, Brookdale, Fannie, and we all worked together well. We did it in 75 days, from the time we actually had a verbal agreement prior to the application, and to get 44 properties done was a pretty amazing feat.
Not bad at all.
And we were strained, but system wasn't broke, and we figured out how to get it done.
Right. And that obviously was a big loan. Are there any more $400, $500, $600 million type refinancing that you
in order
see
to,
out there, maybe?
No. In order to do that, you'd have to pool like was done here. There's several groups of maturing loans. I'd say, I don't have access to Fannie and Freddie's deep secret records, but if you look back at the origination efforts they made, you're probably looking at 2012, so next year, and then 2013. Starting to see more of an increase in maturing loans based on initial 10-year term.
Those were all the 2006, 7, 8 deals?
Or 2002 initially, the 10-year deals. So you're probably going to have, you will have some bigger borrowers, say looking at 2013 maturities in 2012, and may consolidate several into a facility.
And finally, looking ahead in 2012, do you have a budget or a goal of loan volume that you're kind of looking for
Yeah, well,
across the senior care
I guess
spectrum?
one of the refreshing things about working for more of an entrepreneurial company is we're pretty flexible. And because we're so relationship oriented, it's probably more important to us that we pick up 6 more new relationships. And the way I look at it, if we do the business right, we're going to have to do more business. Realistically, we should be in the $500 to $750 million range next year. But as you can tell, it's very lumpy.
One deal can take you right
there. If you
there.
do a $250 million deal, that plays either way. But realistically, we should be in the $500 to $750 million range for senior housing every year.
Gotcha. Well, good luck. Hope you can get there.
Thank you.
All right.
It's been fun so far.
I hope so.
Great.